Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about SoFi Technologies, Upstart, Palantir Technologies, and Tesla. We will be analyzing articles today to where the first one is titled, Two Growth Stocks That Could Become Unstoppable If One Thing Goes Right. The two growth stocks we will be analyzing today are the latest news updates for SoFi Technologies and the latest price targets for Upstart. Next, we'll move on and talk about Palantir Technologies regarding how Palantir has recently signed a new contract with the Ministry of Digital Transformation of Ukraine Strike Reconstruction Partnership. So this is absolutely phenomenal. And this is one of the reasons why the PLTR share price is actually increasing as of right now, because this is acting as a very positive news update and catalyst for the PLTR stock price. Lastly, let's talk about Tesla regarding how they have then integrated their charging technology to where Ford users can also use their charging stations. So we'll be discussing whether or not this is good or bad for Tesla as a company and what this means for Tesla shareholders as well as just Tesla owners in general. So for more news updates just like this one, don't forget to go and annihilate that like button, especially if you like the companies we talk about on this channel, such as Upstart, SoFi Technologies, Palantir Technologies, and Tesla. Comment down below which companies you want me to report on more. Smash the like button if you haven't already. Subscribe if you are new. Don't forget to become a member of this channel by pressing that join button right next to the subscribe button to get access to secret videos, and you can do this to support me for as little as 99 cents, so you literally won't even feel it, because that is a huge help to me personally, and that's what keeps me here on YouTube. So with that being said, let's jump right into today's stories. SoFi Technologies, as you already know, is a financial technology company or a fintech company that operates as a digital bank. On the other hand, we have Upstart, which is an artificial intelligence lending company which uses their artificial intelligence technology to access a market that other lenders can't access, because normally lenders view the credit worthiness of borrowers through credit scores, while Upstart uses a lot of other variables and factors to determine whether or not somebody should be lent money. SoFi right now, their shares are up around 14% so far this year, while Upstart stock has more than doubled since the beginning of May. So it looks like both of these companies are starting to increase in their share price, which is very positive. But investors should be concerned for both of these companies, because right now neither of these companies are profitable right now. However, SoFi Technologies is projected to become profitable by the end of the year, or potentially even before that. Another concern that investors have is the overall macroeconomic economy right now, because if a recession were to occur, it's going to negatively impact financial institutions such as SoFi Technologies and Upstart. So these are near-term prospects that investors should be aware of, but overall, we'll discuss the latest news updates and what I personally think of both of these companies on top of their price targets. Both of these companies are on the cusp of becoming very profitable, and we'll first start off talking about Upstart, which has proven to overall lenders their artificial intelligence underwriting technology, which eventually will put them and push them toward profitability. Upstart has built a very impressive lending platform that is powered by machine learning and artificial intelligence to measure the credit worthiness of overall borrowers. To analyze the risk of various borrowers, it's going to allow lenders to access a market they previously didn't have access to, because some borrowers who don't have good credit scores may actually be worthy of receiving credit and loans. Therefore, for lenders, Upstart's technology could be an absolute gold mine. However, what's the problem with Upstart, and what is my opinion on this overall company? Well, considering the negative macroeconomic economy we find ourselves in right now, and the volatile macroeconomic environment in general, Upstart has not been doing very well. Their revenues were down 67% during the first quarter, where the company lost $129 million. And even after multiple staffing cuts and laying off employees to lower their overall expenses over the last year, this has not really been enough. Despite that, the share price has been surging as of late due to a lot of investor speculation of the future of this company. However, for me personally, I'm not a huge fan of Upstart, and I'll tell you why in just a moment. Currently, the UPST stock trades for $24.64 per share, while experts on the low end believe this company is worth $6, while more bullish analysts and experts and professionals believe this company could be worth as high as $17. But considering that the current share price is above both of these 12-month price price predictions and price targets, it seems that this company is currently overvalued right now, meaning that this run-up is unjustified and we as investors can anticipate a pullback in their overall share price. However, one thing that has continued to go right for this overall company that could make them unstoppable is their overall accuracy of their artificial intelligence lending models. For instance, for lenders, their technology is going to be the holy grail for lending because their artificial intelligence underwriting capabilities have lower default rates, more predictable income, and they lower the risk of turning over unprofitable loans. So this overall is very good for this company. And it seems that Upstart's artificial intelligence or AI-powered underwriting models have been even better than previously advertised. But with that being said, I don't think that they are as revolutionary as some people anticipate. For instance, SoFi Technologies also has their own underwriting policies, which are on par with Upstart in my personal opinion. So why not gravitate to SoFi Technologies, which is more than just a lender? Upstart primarily is just a lender, so that's why I would side with SoFi Technologies, and I personally do not own Upstart, but I do have a 4% allocation to SoFi Technologies in my personal portfolio. SoFi Technologies, like we said, is a digital bank, and I really like how this company has navigated the overall banking crisis of 2023. However, their management is going to have to do a lot more navigation in the future for this company to succeed. SoFi has brought in phenomenal growth prospects in regards to their revenue, their future profitability, as well as the amount of members that they are acquiring. And since SoFi is bringing in more members, it gives them the opportunity to cross-sell and upsell these members on other products, and they are mainly attracting these new customers with high yield offerings for their checking and savings accounts, so these customers can deposit money into SoFi because SoFi does operate as a digital bank. Right now, SoFi shares trade for $5.43, while experts on the bearish end think this company could fall as low as $2.50, while professionals on the high end believe this company could be worth $10 by the end of the year. For me personally, I have an $8 price target over the next 12 months for this particular company, which I think will be achieved after the company becomes profitable. SoFi Technologies has been doing amazing things, and even despite the banking crisis where multiple large-scale banks have gone out of business or at least defaulted, many of these customers have either gravitated toward other large banks who are quote-unquote too big to fail, or some of them have even come over to SoFi Technologies due to SoFi's overall FDIC insurance, which goes up to $2 million, which as compared to other banks that limit their overall insurance to just $250,000. On top of that, SoFi offers much better APYs on their customers' deposits, and they give people phenomenal deals. With that being said, SoFi's management has full control over the future of this company, and they have built a very solid foundation. Their customer acquisition is amazing, their marketing is on point, and their high-yield banking savings accounts and checking accounts are bringing in customers left and right. The only risk for this company is their overall loans, but I have done multiple videos on that, so I will not address it in this particular video. But overall, I do think SoFi is managing their risk quite well, and once this company becomes profitable, the sky is truly the limit. So feel free to do your own research and look further into both of these companies. I personally would rather own SoFi Technologies than Upstart. I just don't think Upstart is necessarily a good company to buy as of right now. It's way too expensive in my personal opinion, but my opinion can change as time goes on, or if the share price gets low enough. Next, let's talk about Palantir Technologies, ticker symbol PLTR, which is a big data and analytics company which serves both commercial enterprises as well as government clients. Palantir also focuses on artificial intelligence as well as machine learning. And Palantir recently signed a contract with the Ministry of Digital Transformation over in Ukraine, which is increasing the overall share price today by over 8%. Palantir Technologies announced this partnership, which will enable the company to support Ukraine in both their defense as well as the reconstruction of their country in the wake of the Russian invasion. Palantir will also use their technology to catalog and assess the damage of various buildings and infrastructure and harness software capabilities to optimize reconstruction of their overall infrastructure. Together, Palantir and the armed forces of Ukraine will work together to exchange data and experience for the future implementation of rebuilding their overall country and also trying to make the country more secure in the future. Palantir's CEO, who is Alex Karp, was also one of the first people from the West in regards to CEOs to visit Ukraine during this time, and that's why they are still using Palantir's technology. This is also going to be great marketing for other European countries, because as they view how Palantir is being very strictly utilized over in Ukraine, other European countries would also want to implement Palantir's technology in not only their armed forces, but also their overall infrastructure. Palantir will also be used to support the resettlement of various Ukrainian refugees, including 110,000 in the United Kingdom. So overall, this is a very positive public relations update and catalyst, and of course news story for Palantir Technologies, and that's why we are seeing their overall share price increase as of today. Now, my personal opinion on Palantir is that I do believe the company is overvalued right now, coming in at almost $14, while the most stringent price targets for this company range between $5 on the low end and $15 on the high end. However, for me personally, I would gravitate more toward a $6 to $7 price target for this company, but the future of this company is intact. They are already profitable, and I think it's only a matter of time before they continuously scale their share price upwards. So very good news update for Palantir Technologies. Last but not least, let's talk about Tesla and Ford. Tesla recently made an announcement regarding their charging technology being lent to Ford. Essentially, Tesla's CEO, who is Elon Musk, said that the future of Ford's electric vehicles will be able to access the 12,000 Tesla Supercharging stations in North America. This move is going to help Tesla not only bring in billions of dollars worth of federal funding, which we will talk about later, but it's also going to improve their overall revenues. Plus, it's going to make it easier for people who own Ford electric vehicles, because instead of Ford building out their own charging infrastructure, they are going to be able to use Tesla's charging infrastructure as well. For Tesla owners, though, this is somewhat problematic because it could mean longer wait times at various charging stations. Elon Musk also warned investors that this could happen a few years ago, where he said that Tesla would eventually open up its charging framework to other EV makers, and the first of which is going to be Ford. Now let's talk a little bit about why Tesla would want to do this and support Ford, even though they are in competition with one another in regards to selling electric vehicles. Well, mainly this is due to take advantage of what the White House is doing, to where Tesla could receive funding from the United States government by doing this. And this is also just to help out the economy in general, because multiple electric vehicle makers are trying to build out various charging stations, but for Tesla to own these charging stations and be the dominant network, this is going to bring in them loads of revenue. So it's kind of bittersweet, because yes, the lines are going to be longer at Tesla charging stations, because now other vehicles are going to be integrated and be able to adapt to charge at these stations. However, from a company standpoint, this is very good. Elon Musk even says, and I quote, "It is our intent to do everything possible to support Ford and have Ford be on an equal footing at Tesla Superchargers." So although this is not necessarily bullish for people who own Teslas, this is bullish for people who own Tesla shares. Even Ford spoke out very positively about Tesla, saying that this is a really big deal for our customers. We love the locations, we love the reliability. It's pretty amazing what you and your team have done for the customers. And that's exactly what a Ford representative told Elon Musk. So this is very positive in general, and over the long term, this is going to increase the TSLA share price, which is already surging by almost 7% as of right now. So for more videos just like this one on Palantir Technologies, SoFi Technologies, Upstart, or Tesla, don't forget to comment down below which company you want me to report on more of. Subscribe if you are new, annihilate that like button if you made it all the way to the end of the video, and don't forget to become a member of this channel for as little as 99 cents, so you won't even feel it, and it helps me out a ton. With that being said, I will see you in the next YT video.